Mike, how you doing, brother? Good to see you. Hi Miles, the CMF family. Everyone, good to see you as well. How you doing? Happy Pisces, good to see you as well. How you doing? How you been? Hi Miles, what is going on with crypto? Is only down and now is at the lowest price. Johnny, we should be soon into some sort of a flip coming to the end of the year. I think this little tiny pump is just a tease for the retail markets. It will complement down depending what Japan does tomorrow. I do agree. What's happening with the Japanese market space regarding their rate situation, regarding the dumping they're going to be doing, it is definitely going to be impacting essentially the market space. 100%. I do agree with Happy Pisces. Good evening, Miles. How are you doing? I'm doing great, Kelly. Good to see you as well. Evening, Miles and CMF. How's everyone? Joe, good to see you. How you doing? Hello, Miles. How you doing today? I'm doing great, Carlos. Good to see you as well. Hi, Miles. How's things? Autistic. Good to see you as well. How you doing? I hope everyone can hear me today. There's no more issues since yesterday. I had a conversation essentially with Restream, and they told me what to do essentially to update some certain things and turn some things off, leave some things on, and that should essentially make the crackling noise completely go away. So I'm hoping that it has gone away and that there's no more crackling noises moving forward. It really has put me in depression. Don't worry about it, Johnny. Frustration is always going to be the last step inside a market space. I said that to everyone 2 years ago. When we reach the end goal, frustration is going to be the one that pushes a lot of people out. Good evening, Miles and family. Good to see you. Ian, how you doing? Now, let's do the intro disclaimer of what we're going to talk about on tonight's live show, because there's a lot of things that we've discussed, a lot of things that we couldn't even discuss yesterday due to essentially what happened. It's much better and clearer today, sir. Let's go, Carlos. Sounds great. Let's go. I'm happy that the Restream situation has been resolved. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m., long time onwards, for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Now, on tonight's live, we're going to be discussing matters regarding the Chinese market space, the Japanese market space, and also things that are coming out from the SEC perspective, things that are essentially some perspective news we're also going to go through regarding the Chinese market space, perspective news regarding the economists that are coming out and don't agree with the recent data that's came out. We're going to be talking about some partnership news on tonight's live as well, some AI news to go through, some Donald Trump news to go through on tonight's live as well. And this is episode 420 of the CMF live show. 420 was supposed to be yesterday, but we couldn't do the live show due to technical errors with Restream, which all have been resolved for now, moving forward essentially. And also, thank you so much to everybody who has already smashed the like button and the retweet button. I can see Manny just liked the live show as well. Thanks so much to everyone, honestly, who's liked the live show already and retweeted the live show if you watch us on X. And thanks so much to everyone who's also liked the live show watching on YouTube. And a special thank you to everyone who's also put a comment outside the live as well. Now, before we go through the first news, let's go start the comment section one more time, then straight into the first news. We'll do some news, come back to comments, news, comments, and so on. So, let's see where we were at. We were here. When can I see XRP $1,000? Johnny, give it some time. Morning, Miles and CMF. Shelly, good to see you all morning. How you doing? Good evening, Miles. I hope you've managed to sort the crackling out. I'm sure you will have. I think so as well. Good evening, Miles and CMF. Good to see you as well, Manning. Good. How you been? I'm hoping that everybody can hear me clearly now and see me. There's no more issues with Restream. Just for a thumbs up in the chat if everything is good, sound and essentially video. Also, I'm not at my own house. I'm at my business partner's house, the co-founder of CoinMove right now. Just so I know, put a thumbs up inside the comment section right now of the live show if you can hear me and see me clearly. There's no more issues or crackling. Hello, Miles. The crash continues. By the looks of it, T. Volume is distant. Okay. Excellent. Okay. Volume is better now. I pulled the camera a bit more closer, so maybe that will fix the distance volume situation. Good evening. Hear you loud and clear. Let's go, Silas. Let's go, Joe. Let's go, T. Let's go, Ian. Excellent. And Shelly, I'm hoping you can hear me better now, but I've pulled the camera in a bit more. Okay. Now, the first news on tonight's live show is regarding the Chinese market space. And in terms of essentially, are we in a bear market, are we in a bull market, or are we in some sort of a manipulation market stage? The Chinese actually have given some sort of perspective on the crypto market space, even though they do seem to still ban cryptocurrencies, even though they're still the biggest purchaser of Bitcoin mining equipment. So, here it is. Chinese cryptocurrency exchange founder responds to claims that Bitcoin's bear market has essentially arrived, shares what he expects. Lin Han, the founder of cryptocurrency exchange Gate, commented essentially on the is a bear market coming or a bull market in motion, essentially. A debate essentially stating that Bitcoin halving has become less influential compared to the past, that cryptocurrencies is becoming increasingly entangled essentially with US politics and global macroeconomic effects rather than Bitcoin's halving, which is the exact same perspective essentially Cathie Woods essentially is sharing, and Grayscale is sharing as well. Even JP Morgan's analyst is sharing the same perspective that Bitcoin's halving doesn't really matter anymore. What matters is politics in crypto and any sort of essentially macroeconomic effects or geopolitical tensions. That's what essentially moves the crypto space and tech stocks, no longer essentially Bitcoin halvings. So on that basis, Lin Han argued that the 4-year cycle trend, which is Bitcoin's halving, frequently cited essentially the crypto market, was more influential in the early stages, but today, due to limited new supplies, that the halving's impact has become pretty much non-use. According to Han, BTC no longer essentially operates as a self-contained ecosystem. It has become essentially a part of a broader risk asset space that moves in tandem with the US stock market and the global economy. Han also stated that one of the previous major transition points come essentially back in 2020 when an intra-sector essentially dynamics such as the summer of DeFi essentially, but the crypto markets cooled rapidly in 2022 as post-pandemic essentially global economic conditions deteriorated, and describing 2022 to 2023 as relatively cold periods. Han also noted that the ETF approvals and expectations of economic recovery warmed the markets again towards the end of 2023. Lin Han also argued that a sudden and deep bear market of kind seen in past cycles is unlikely, stating that even in a pullback, a drop from $100,000 to 100 essentially between $100,000 and $120,000 range to $80,000 range or $90,000 range would still be relatively high, and therefore we are not in a bear market, just at manipulation. He also suggested that while there were reports of decreased volumes in November, his patterns and data indicated that the decline was limited. And according to Han, one of the main risks to watch for in the coming periods is whether the bubble, which is the AI situation, will essentially burst or grow. Capital into data centers and essentially computing infrastructure this year, Han stated that the question of is it a bubble or not has essentially arisen due to uncertainties in surrounding probabilities in some large institutional investments. Despite the strong performance of infrastructure-focused companies like Nevada, profitability in large-scale infrastructure projects can be essentially uncertain. So obviously there is still a risk of an AI bubble situation, as Michael Saylor is suggesting, but on the other side of the spectrum, we're getting huge, essentially, investments coming in right now for the AI space, to be essentially fairly honest. So AI bubble pretty much is left on the sidelines for now. For the time being, I wouldn't say we're in some sort of AI bubble burst right now, but it's one outcome to consider. The other outcome is even China's essentially market analysts are suggesting that we're not in a bear market, just at a very manipulated market space right now. Now, moving on essentially from the Chinese perspective of the market space, which we rarely get that much, to economists. Before we talk about economists, let's go inside the comment section first before we come to the next news. So let's see where we're at inside the comment section. We were at here. Why is the Uphold account frozen? Why is my Uphold account frozen? Why is your Uphold account frozen? I wouldn't be able to tell you why your Uphold account is frozen, essentially, Silius. The best option would be to contact Uphold's customer service and see what the reason could be. Sometimes it's just due to maybe they need more documentation from you or something that needs to be updated or confirmed. The best option is to contact them. You can contact them also through X, customer service as well. Just make sure it actually upholds. They would have a gold tick regarding customer service on X. Hi Miles, how are you? Loving the discounted prices. Me too, Peg. Good to see you as well. How you doing? Good evening, Miles and CMF Bullock XRP. Good to see you as well. How you doing, Mike? Let's go. That's because you're so far away. Shelly, get closer. And let's watch together. Let's go, Jane. Good evening, Miles. Jane, good to see you as well. How you doing? Still, your voice isn't perfect, but it's better than yesterday. No more crackling noises. What up, Miles and CMF? Ray, good to see you as well. How you doing, brother? Hi, Miles and CMF. Good to see you guys. Let's go for Facts News. I was busy, but I'm back. Let's go, Carl. Truth, let's go. Miles, I made some significant adjustments to my portfolio before January 2026, said Carl. I also took essentially the opportunity to update my tax records in my country, fair enough. Fingers crossed that everything goes smoothly without any penalties. Long live cold wallets and beware of centralized wallets. Thank you for your insights and valuable information. No problem, Carl. Anytime. Good evening, Professor Miles and the rest of the family. Good to see you as well, Funky. How you doing? Now, moving on to the next news on tonight's live, which is regarding the Economist and the data we just received. So there was CPI data that I essentially read out. Your voice is mono and not stereo. Can everybody hear me perfectly or not? Just out of curiosity. What about now? Can everybody hear me now? Because I adjusted the phone a little bit just so that maybe any that is essentially having some sort of difficulty to hear me, they can hear me. I can only hear you in one ear. That's odd. Are you using headphones? Maybe take out the headphones and see if the voice is still distorted or some sort. I'd suggest doing that just to test it out. Volume low. Okay. Yes, perfect. Okay, the sound is perfect. Economists, essentially, regarding the data we received yesterday, are not happy. So, essentially, on yesterday's live show, right at the beginning, I was able to share some sort of data that came out from, essentially, not the best sound. Is it because the volume's low? Yeah, I'm on a laptop and it's only coming out one ear, one speaker. Okay, it's because I've turned off one thing. Okay, it is a bit louder. Okay, so we leave it here. Just out of curiosity, I'm going to test one thing out. I'm just going to test one thing out quickly. Is it better now? The volume is very low, Miles. I thought it was my phone. There's only sound left, not the right. Is it better now? Is it better now, or is it still distant? That's better. That's better. Better, yes, better. Perfect now. Perfect now. Better now. I just want to hear when the hell see the bull run. Yes, brother. Hi, Miles. Hi, everyone. Sound is okay for me. Let's go on love. That's better. Louder. Better. Yes. Stereo now. Okay. So problem solved. Perfect. Okay. Okay. Yes. Yes. Perfect. Yes. Perfect. Wow. Much better. Okay. Lots better. Okay. We're back to normal. Yes. Yes. Now it's much better. Okay. We're back to normal. Now, on to the next news on tonight's live regarding the economists that are not happy with the data that has just come out of essentially regarding the Fed, essentially their data reports, which is this. Economists said that the November inflation report was unreliable because the shutdown blocked real data collection. Some economists right now are coming out and they don't agree with the Fed regarding what they released of essentially the job report data essentially that recently came out due to having a massive lockdown, suggesting that the Fed didn't have the right data and they're just putting out random numbers. Before they could even had essentially their morning coffee, Wall Street economists were saying they don't trust November's consumer inflation report that was released earlier today. That is essentially reportedly because it was built on shaky grounds as the government shutdown blocked real data collection for 6 straight weeks, forcing the Bureau of Labor Statistics to guess its way through large parts of consumer price indexes. Cryptopolitan reported that the headlines number came essentially in at 2.7%, far below its 3.1% forecast, and essentially core inflation rose to 2.6%, also weaker than expected 3%, setting off essentially a debate over whether these numbers reflect the real economy or just the consequences essentially of statistical patch jobs. Economists also pointed out that the BLS had no choice but to throw out the October report entirely because it had almost no unusable survey data, leading to the agency's impute many prices. This process replaces missing survey results with estimates and is dominated in November reports. The BLS also said it even used non-survey data for some parts of the index. In recent months, the agency had been inputting more than often anyway due to budget cuts, and the cuts essentially hurt its field's operation. In September, essentially imputed values made up as much as 40% of the CPI essentially inputs. The agency did not reveal the November shares in any sort of a way. Michael Hansen at JP Morgan said that essentially the softer readings, suggesting that the BLS may have held fixed numbers of prices it was not able to collect in October, which likely means a material downward bias in the current numbers that will be reserved in coming months as full price essentially collections resume. Diane essentially at the KPMG US also warned that because it was a shortened survey month, you've got to take it with a grain of salt. She said things that should be going up are going down, and things that should be going down are going up. So it's confusing, and it doesn't quite square with the prices that has been essentially observed. Markets also reacted with their usual mood swings. Yields on short-term government essentially debt dipped after the reports came out, which paused prices higher, but the move faded fast, and the two-year Treasury essentially yield touched a two-month low of 3.43% before snapping back. Stocks, on the other hand, opened strong. The S&P 500 rose 0.9%, the Nasdaq jumped 2.4%, but traders did not fully trust the numbers, and John, essentially also from Barclays, said markets don't care because the data doesn't pass the smell test. He added that given the lack of explanation about how the BLS made these decisions, it's hard to take in the face value because it was such a big miss, and it's because it's hard for the markets to take in that type of data. Literally, investors don't want to bet on the house. The stubborn path also of inflation in recent months had already become a political headache for President Donald Trump. Voters have been essentially frustrated by the squeeze of living costs, so the White House essentially jumped on the softer essentially reports. Kevin Hassett, also now leading the National Economic Council, has seen the top contender to run for the Federal Reserve, said, "I'm not saying that we are going to declare a victory yet at the price problem, but this is just astonishingly good CPI report." Trump used the moment to push again for faster rate cuts and kept attacking the Fed, essentially Jerome Powell, calling him a moron over essentially what he sees as a slow action. But analysts said the questionable data may not sway the central bank much more. The Fed also essentially voted last week to cut borrowing costs on a 3-year low after a tense meeting. Look, and the easiest way to put this, nobody trusted the data that essentially was released by the Fed because the Fed didn't have the correct data to release it. Trump is still saying we need more rate cuts. Everybody else, in terms of Wall Street, Barclays, big banks, institutions, nobody's trusting the data that's coming out, which means nobody wants to be invested inside the market space. And a lot of investors are sitting on the sidelines right now, which is not good on the side of having manipulation and some geopolitical tensions going on. Also, we have the Trump situation of we don't know what he might say. It could be good news, it could be bad news, it could be neutral news regarding the speech he's going to be making. It's around 2 a.m. UK time, 9 p.m. Eastern time that his big speech is going to be at. We just have to see what happens for the time being. But the recent data that's just came out, nobody trusts them. So the market is on some sort of neutral grounds of not moving up or down by the looks of it. Now, moving on essentially from the economists that don't trust the data that's just been released to Japan. Japan is essentially becoming a big issue right now, because they might start dumping on the market space. And if they do that, then that's going to impact essentially Bitcoin's price. It's also going to impact altcoins because yet we still do not have a Clarity Act, which means certain crypto projects cannot decouple from Bitcoin's footsteps. So if Bitcoin goes down, we all go down because we don't have a Clarity Act. Now, based on the Japanese market space, and here's essentially what's going on. Japan's rate move puts Bitcoin at a risk of a big crash, they're suggesting right now. Bitcoin is back in an essentially uncomfortable spot, and this time the pressure isn't coming from the US or the Fed. Instead, all eyes are on the Japanese market space. With a rate hike expected, essentially, traders are starting to revisit an old pattern that hasn't treated Bitcoin very kindly in the past. A recent post essentially summed up the concern quite clearly. Every time Japan has stepped away from the ultra low rates, the Bitcoin price has struggled soon after. When you look at the charts, it's hard to ignore it. These moves didn't essentially lead to slow or orderly pullbacks. They tend to be essentially a spark, sharp drops that caught traders completely off guard. Japan might not dominate crypto headlines, but it plays a huge role in global liquidity because it does. Japan borrowed a lot of money on zero interest, which it needs back. For years, the yen has been essentially one of the cheapest currencies to borrow against. Funds could essentially take out the low-cost loans and convert the money into essentially dollars and put it work essentially in stocks, bonds, and crypto, including Bitcoin. In other words, a lot of people borrowed money from Japan. That strategy works as long as borrowing stays cheap. Once the rates rise, the equation changes fast. And suddenly also, and suddenly also, And suddenly also these positions become more expensive to maintain, and some have to essentially unwound regarding essentially what's happening. When that happens, funds usually sell whatever they can move quickly. Bitcoin trading 24/7 with deep liquidity often ends up being the sell side. This helps essentially explain why previous Bank of Japan moves didn't lead to calm corrections inside the crypto market space. And in terms of essentially what's happening, BTC's price essentially drops quickly. On the weekly, Bitcoin chart essentially shared by essentially no limits, the timing stands out. Past Japanese rate hikes tend to line up with periods where Bitcoin's price topped up and then rolled over. In several cases, prices essentially moved sideways for weeks, giving the impression that things were stable before essentially breaking lowers. Right now, essentially Bitcoin looks like in a similar phase. The price is stuck in a tight range. Volatility is creeping higher during essentially sudden drops that we're going to be having are showing up without any sort of major news. I'm guessing everybody's realized essentially why Bitcoin suddenly keeps on dropping for no apparent reason when there is no news. It's due to the Japanese market space that might be on the verge of raising essentially rates. Once that happens, Bitcoin's market space is going to be crashing slightly, but it'll be a sharp crash, which means there'll be a sharp bounce back as well. To be fair, Bitcoin today isn't the same market it was 2022. Back then, aggressive essentially Fed hikes helped drive a brutal drawdown of more than 60%. Since then, market structure has improved and institutional participation is much more broader. Still, being more mature doesn't make Bitcoin immune to liquidity shocks. If Japan signals essentially that higher rates are here to stay, it reinforces the idea that essentially cheap global leverage is fading. That doesn't mean Bitcoin is about to collapse, but it does indicate that easy money phase that fueled fast rallies may be behind us for now. And moving in forward is essentially it's all going to be about regulations and utility. For traders running high leverage, this kind of environment can turn dangerous very quickly. In other words, the moment the Japanese raise the rates, expect Bitcoin to do a sharp drop and a sharp essentially bounce back, but expect it to do a sharp drop, which means if you are somebody that's doing leverage trading right now, you most likely will be getting burnt. For more patient essentially market participants, though, these movements have often marked the early stages of a larger reset rather than the end of the story. Bitcoin isn't breaking essentially down yet, but with Japan back in focus, the market is being essentially reminded that global liquidity still matters. What comes next may essentially depend less on hype and more on how markets adjust when one of the world's cheapest sources of money finally starts to tighten. So one outcome you really have to consider right now is that the moment the Japanese market space raises the rates, expect Bitcoin to do a sharp decline. So if you are somebody that's thinking about buying more inside the crypto space, maybe wait for the Japanese market space to raise the rates. Because the moment they do that, Bitcoin will do a sharp decline, altcoins will follow in suit, which means you could pick up whatever you want to pick up inside the crypto market space, maybe XRP, XLM, XDC, HBAR, Solana, AVAX, whatever you want to go for. It'll be the perfect time to buy inside the market space. Not financial advice whatsoever at all. Now, moving on from essentially the Japanese market space to the US Congress. Before we talk about the US Congress, let's go inside the comment section first. This was happening there. Then we go straight into the next news. Ironically, essentially the Japanese rate hikes are going to be at around about the same time that essentially Trump is going to be doing his speech. Coordinated or essentially some sort of coincidence, we'll see. Now, let's go inside the comment section first before we go through the next news on tonight's live. Let's see where we were at. We were at here. So just adjusting the camera. We were at even though as a CMF, good to see you as well, Jason. How you doing? We were here. Yep. Bank of England dropped interest rates by 25% today. It's true. The Bank of England did essentially cut the rates, which is good. But the Bank of England, unfortunately, doesn't impact the crypto market space that much. Miles Trump has already made the speech last night. There's not a speech. I think UK rate is in the same range. Hoping so. Hi, Miles of CMF. Good to see you as well, Stormy. How you doing? This is a good time for XRP to decouple from BTC. It is the perfect time for a lot of crypto projects to essentially decouple from Bitcoin's footsteps, to be fairly honest. Miles, are we heading for a $1 XRP before end of the year? So that's what influencers are saying. Possibly we could do, but we have to see regarding the Japanese market space. It all depends on what the Japanese want to do. If they do decide to essentially, raise the rates, then it is going to be a sharp decline in Bitcoin. Unless everybody assumes the market's going to go one way and the market goes the opposite way, because people will be putting leverage bets down. So in other words, majority of the market thinks that Japan is going to be raising rates quite ridiculously. If they do that, then everybody's going to be short in the market space. Sometimes the market tends to move the opposite way, because the house has to win. So we have to see how it plays out, to be fairly honest. What is this happening? Regarding the Japanese market space, they might be raising the essentially rates on the market space. Hello again, country. Good to see you. How you doing? How you been? So basically, we are shafted for a little while then, just until essentially the end of the year. Going into January, we should be okay. Nice, a bigger discount coming. Nice. Best way to look at it, honestly, Peg. And decouple now, 100%. Honestly, if we could only just decouple from Bitcoin's footsteps, all we need is a Clarity Act, and the Democrats are the ones not letting it happen for the time being. The Democrats are angry that every time a crypto regulation passes, Trump's family gets wealthier. So therefore, they're taking their sweet time with their essentially, regulations. Now, moving on, U.S. Congress gambles on zero budget task force after Americans essentially hemorrhaged about $10 billion to scams. Crypto scams are a massive deal inside the crypto market space. And if we want to move forward, essentially, inside of this market space, then, we need to crack down on crypto scams to make this space look more legitimate. So here is essentially what's happening in the US. And many other countries have their own special team. There's a special team called CARF, which the UK is a part of it, the EU is a part of it, the UAE is a part of it. Some essentially Latin American countries are also a part of it as well, which is a group that essentially cracks down on crypto scams. America has created its own team. US Senator Jerry Moron essentially made crypto news by introducing legislation that aimed to create a federal task force dedicated to combating crypto scams. The strengthening agency framework for the enforcement of Cryptocurrency Act, or essentially calling it the Safe Crypto Act, tasked the Treasury Secretary with establishing the task force for recognizing and averting cryptocurrency scams within 180 days. The development came as digital asset theft essentially surged past $3.6 billion in the first 3 quarters of 2025, according to Hacken's essentially 2025 Trust report. Access control exploits accounted for nearly 58% of losses inside the crypto space with just crypto scams, while phishing captured essentially 21%. North Korean threats actors linked to 56% of stolen crypto funds. In the broader time frame, US authorities estimated Americans lost around $10 billion to crypto investment scams in 2024. According to essentially a Deep Strike report from November, as per the crypto news, pig butchering and romance investment scams drove much of the total. The Safe Crypto Act that is going to be established and introduced, coordinated body chaired by the Treasury Secretary. Additionally, membership included the Attorney General, FinCEN Director, also Secret Service Director, and representatives from stablecoin issuers, exchanges, custodians, blockchain intelligence firms, victim support networks, and state regulators. You can tell America is taking crypto scams very seriously right now when all of those departments are involved. The Secret Service is involved in investigating crypto scams now. The task force essentially receives no dedicated budget or new essentially investigating powers, and its members serve without compensation beyond their existing government salaries. The group must meet at least 3 times in the first year and submit an initial report within 12 months. The bill also mandates annual updates. The task force expires 3 years after the first report comes out. Bill, the lawyer at Essentially Consensus, said that the task force gives guidance and support and top cover to the larger federal and state law enforcement contingents. He noted also that they rarely have operations onto themselves. Hughes essentially questioned the membership structure. The DER essentially USSSS reports to the essentially Secretary of DHS, who isn't on the TF essentially. The Attorney General technically is the boss of the director, the FBI, but the latter isn't on this. And the IRS, essentially CI, and the HC, essentially SI, are arguably more involved inside of crypto fraud investigations than the USSSS, but they aren't included. The bill directed essentially the task force to evaluate FBI Internet Crime Compliance Center data, access essentially international anti-scam approaches, determine education strategies, and coordinate efforts to pursue the individuals that are committing these crimes, and the work with stablecoin issuers on freeze and seizure capabilities also. The document explicitly essentially encouraged public and private real-time information sharing and essentially networks to block funds linked to scams. If the United States of America is now taking crypto scams very seriously, where essentially some members of the FBI, the Secret Service, blockchain custodians, blockchain exchanges, blockchain companies are now involved in the same table discussing how to stop crypto scams, it means that they're taking the crypto space extremely, on a mature level now compared to what it was, which are, in my point of view, bullish signs that they're seeing the crypto space as a much more mature space that should be protected going forward, which means we're closer than ever to more regulations, we're closer than ever to more institutions coming in. Because beforehand, they didn't care much because it was the retail section that was pretty much losing so much money. Now, the reason why they care and they're essentially creating a crypto safe act is because the institutions are coming in. Next year, it's all about institutions and high-profile investors coming into the crypto space. Binance, Crypto.com, Kraken, Coinbase. Every crypto exchange you could pretty much think of has created some sort of a department for the institutions that are entering next year and the high-profile investors. They couldn't care less when there's retail invested into it, but they care a lot that going into 2026, it's high-profile investors and institutional investors, hence why they're creating a Crypto Safe Act now, going into 2026, to protect the crypto space. Either way, it's good news, and it also shows essentially that they're getting more prepared for institutions and high-profile investors entering the crypto space. Now, moving on from that to MoonPay. Before we talk about MoonPay, let's go inside the comment section first. That's what's happening there, and then we'll go straight to the next news on tonight's live. Let's see where we're at. When is the Japanese say they will raise it by 0.75% from 0.00 tomorrow? That isn't great. That should make the markets drop slightly, I'll be honest, in a sharp decline. Miles, is it true that the Clarity Act is extended for next year? Yes. The Clarity Act, essentially, which I was going to share with everybody yesterday, but we couldn't because there was an issue with the live show on Restream. The Clarity Act meeting happened regarding essentially the senators having a discussion on the Clarity Act. And the people that were invited to that table was essentially Brian Armstrong, CEO of Coinbase, and also Brad, CEO of Ripple, was also there. They were having discussions regarding the Clarity Act. The Clarity Act, for the time being, has been pushed to January. Hey, Miles, you look tired, brother. Take care of yourself. You deserve it. Let's go, Ian. Thank you so much. And yes, it's been a long day. Clarity Act deadline, is it by June 2026? No, January. It's moved to January. But Scott is still persistent that he is going to be passing the Clarity Act by the end of the year. I hope, honestly, that Scott is able to pass it. In his own words, he's still standing by it. By the end of the year, essentially we would have a Clarity Act going into January. So I hope he stands by his words and he can get the job done. The only people that are standing against the Clarity Act are Democrats. They're the only ones. And it's one special little Democrat person that's stopping all of this. Senator Elizabeth Warren. Everybody's worst nightmare. She's the one that essentially is being difficult with the Clarity Act mostly. Now, the New York Stock Exchange is what we're going to talk about next. The New York Stock Exchange, essentially owner ICE, reportedly in talks with MoonPay. Also, Caroline Pham, the acting chairman of the CFTC, is now going to be working essentially for MoonPay. That is massive news. So, the Intercontinental essentially exchange, the owner of the New York Stock Exchange, is reportedly in discussions to invest in MoonPay, a cryptocurrency payment company, according to a Bloomberg report, though no official essential confirmations have been made yet. ICE's potential investment in MoonPay indicates a growing institutional essentially interest in the crypto sector, but official sources and confirmations of financial details remain undisclosed for the time being. But official sources confirmations of financial detail remain undisclosed, affecting market clarity. The Intercontinental Exchange, ICE, the parent essentially company of the New York Stock Exchange, is reportedly in discussions with MoonPay on that matter. The immediate effects on the crypto industry and financial markets remain speculative for the time being. Without official statements, the details essentially, including funding amounts, remain shrouded in uncertainty. As of December essentially 18, 2025, no primary source and confirmation of direct quotes from the key players or leaderships of the Intercontinental Exchange or MoonPay have been found and provided search results. Yet, this news essentially is coming some sort of way from Bloomberg that MoonPay and a parent company of the New York Stock Exchange are in some sort of crypto talks and something's about to happen. Political and social implications are also unclear due to the ambience of comments from essentially regulatory bodies such as the SEC and the CFTC, which are pivotal in crypto-related investment disclosures, and the financial sector essentially awaits more information. In the absence of this official announcement, stakeholders are also left speculating essentially regarding about potential outcomes. MoonPay's aim for institutional investors suggests a strict expansion in the consumer base beyond retail users. The potential investment by ICE and MoonPay could signify a trend towards greater institutional involvements in cryptocurrencies. However, the lack of historical data or past evidence makes it challenging to predict what could possibly come out of this. I could pretty much tell if MoonPay and essentially the New York Stock Exchange parent company ICE get together and somehow get involved, it's extremely bullish for the crypto space. Wall Street has been taking more footsteps towards the crypto space than ever before, especially going into 2026. Now, moving on from essentially Wall Street and MoonPay's, big footsteps they're taking inside the financial sector to British politics. You see, the United Kingdom is still a little bit far behind, essentially, in terms of crypto regulations. But they are trying their best now compared to what they were doing before, just saying random words like, we will become the capital of cryptocurrencies. They never tried. Or we will become the capital of essentially AI. They never tried. They say a lot of things that don't essentially take action on. And to be fairly honest, the Labour Party says a lot of things on different topics that they never take action on either. But here is what's happening regarding British politics and the AI and crypto space. British politicians are leaving the UK and joining US tech companies. The shocking revolving door trend reshaping AI and crypto, with British politicians leaving the UK and joining American companies. So here it is. The migration of British politicians to Silicon Valley represents a strict evaluation in the tech industry's approach to growth and regulations. Companies are no longer just hiring engineers and product managers, they're also recruiting political, essentially heavyweights who understand government machinery from the inside. I'll be very honest, 2 years ago, I said if the crypto space wants to advance and expand inside the financial sector, they have to get involved in politics. And the best way is to get a politician on your side. Regarding essentially that, companies are no longer just essentially hiring these engineers and product managers, but also recruiting heavyweight essentially politicians. This trend accelerated dramatically in May 2025 when former UK Finance Minister George Osborne announced his dual appointments regarding following similar moves by other essentially prominent figures from British politics. The AI talent wars are intensifying, but there is a surprising new battleground emerging: the corridors of power, in a stunning development that has captured global attention. Former British essentially chancellors and essentially other members of British politics are leaving, and they're joining OpenAI, ChatGPT, or even Coinbase in a high-profile roles, joining a growing list of UK political figures, making a leap to the American tech giants. This isn't just about a career move, it's a systematic shift in how technology companies are positioning themselves for regulatory influence and global expansion. This, as much as it may be seen as politics or getting more involved inside the crypto sector, is actually brilliant news. The more essentially politics and crypto intertwine together, the better it is for the crypto space. If you want to pass regulations, you've got to have politicians in your side pocket. It is the easiest way to get regulations processed. For cryptocurrency enthusiasts and AI observers alike, this trend reveals crucial insights about the future of tech governance. The trend of British politicians joining these US tech companies has immediate implications for how both cryptocurrencies and AI will be regulated globally. For Coinbase, the British politicians that are joining Coinbase, navigating regulatory uncertainty is essential. The company has faced challenges with regulators essentially in multiple countries and needs experienced navigators like Osborne to help shape favorable essentially frameworks. For OpenAI, the stakes are equally high as AI becomes more powerful and integrated into critical systems. Governments worldwide are developing regulatory approaches right now, having former officials essentially who understand these processes from the inside, and it gives companies a significant advantage in shaping the outcomes. This dynamic also creates a paradox. The people most qualified to regulate emerging technologies are often the most likely to be hired by the companies being regulated. This raises fundamental questions about how ensure essentially fair and effective governance technologies that will shape our collective future. So, British politicians are leaving the United Kingdom and joining Coinbase and AI and other essentially tech firms out there as well. That is quite massive news, to be fairly honest. It does show that, as I said a long time ago, if we want to see crypto regulations passed, if you want to see clarity and so on, then essentially we need politicians on our side pockets. It's the only way to pass regulations out of crypto space to be able to move forward. As much as some people might hate politicians or hate politics in general, it's the only way to get things done. You need to have them in your side pocket, which is exactly what Coinbase is doing, which is an extremely, in my opinion, a smart play. Now, moving on from that, but sticking relatively to the topic of the United Kingdom, you could say the UK has realized that British politicians are leaving the UK and joining American tech giants. That because the UK is dropping most of its benchmark rules and removing 90% of its providers from its regime. The UK Treasury today is cutting back its rules for financial benchmark providers in a move aimed at making the country look more attractive to US investors, according to the Financial Times. On one side of the spectrum, British politicians are leaving to join US tech firms. On the other side of the spectrum, the UK realized this essentially and decided to remove 90% of the benchmarks so that the UK becomes more attractive for US tech firms. The government is rolling out a lighter system that lets asset managers buy a wide range of benchmark products without waiting for providers to meet strict local requirements. The plan removes most companies from current frameworks, with officials saying about 90% of the benchmark companies will no longer fall under the existing rules. These companies run stocks and bond indices that give massive amounts of global capital. And the Treasury says that essentially the goal is to reduce friction as the UK tries to lift a slow economy. The Treasury is also dropping a rule book that would essentially have restricted which foreign benchmarks UK asset managers could use. Those rules also essentially were meant to take effect in 2030, but the government is scrapping them right now. The change aligns the UK and essentially more closely with the US, where these businesses operate with essentially without the same oversight. In other words, Remember when Gary Gensler said that the crypto space can essentially operate under the same rules and regulations we created in the 1980s, which was completely absurd and completely stupid. And then moving forward, Gary Gensler was sacked and removed from his position, and the SEC, the CFTC, the FDIC, the OCC, all became pro-crypto, all started looking at the crypto regulations because crypto cannot operate in those certain essential regulations. We need new regulations for the crypto space. The same scenario is happening in the UK right now, where the UK has come to a conclusion that the regulations that they keep on creating back to back is actually not letting the tech space breathe. So they're removing 90% of the restrictions they put on the tech space and essentially stocks and companies that want to invest inside the United Kingdom. And this should open the doors back up for investments. The UK currently has around 45 authorized, essentially benchmark providers, including LSEG, S&P Global, JP Morgan Chase, and Bloomberg. Under the new approach, only those offerings widely used essentially will stay under the Financial Conduct Authority. The rest will fall outside the formal regime. The Treasury says it wants feedback before locking in the changes, forming essentially them as another step towards cutting essentially down the red tape in London, while the government essentially looks for ways to revive growth during President Donald Trump's second term in the White House. The announcement also lands at the same time the EU is also going to be signing off its own reform. Essentially, lawmakers have essentially approved a package meant to push more everyday people in essentially in the bloc to invest in stocks and bonds instead of keeping most of their money in low return bank accounts. One of the lead negotiators, essentially Stephanie, said that the new rules would essentially move the savings and investment unions from theory to reality, and that the work focused on preventing abuse while keeping advice open to regular essential investors. The retail plan is also a part of the EU's Capital Markets Union, which has been running for a decade. It's not just the UK that's opening its doors once again to investments, from foreign investments to removing 90% of essential restrictions on the market space. It's also the EU. They're taking a page out of the US. The way Donald Trump essentially transformed the regulations when it came to the crypto space or the AI space, the tech industry in general, or investments in general, is the exact same footsteps the UK is about to be taking, and so is the EU. The effort responds to long-running concerns from officials who say essentially households keep too much of their wealth in deposits and not getting involved in investments due to so many restrictions inside the market space. So, the EU and the UK are about to be opening their doors up to more investments, and the UK is removing 90% of its restrictions that they previously had, or any other restrictions that they were thinking about introducing by 2030. They even scrapped that, to be fairly honest. That is incredible news. And also, the timing is, again, very interesting. As we're going into 2026, it's all about institutional investors and high profile investors, and suddenly 90% of the restrictions are removed from the market space. Interesting timing. Either way, it's bullish news, but I just wish that I did it much more earlier. Now, going into the next news on tonight's live is regarding essentially Trump. Before we talk about Trump, let's go to the comment section first. Let's see what's happening there, and then we'll go straight into the next news on tonight's live. So let's see where we're at. €10. Carl, thank you so much for the €10 donation. Absolutely amazing, Carl. Thank you so much. I want to thank you for your tremendous work. Thank you for everything you're doing as we approach this new financial paradigm. Carl, honestly, thank you so much for the donation. Absolutely amazing, Carl. Thanks so much. Hey, Miles, you looked okay. I read that one already. Clarity Act deadline is about June 2026. Nope, is January. It's, in a way, it's okay the Clarity Act is in the past because Ripple is the only true utility coin that can handle requirements of new financial systems. No competition, so would step into place if they're flipping the switch on digital changes. True, I do agree with that 100%. XRP coin of Ripple, I meant, sorry to talk too fast, no problem, Happy Pisces. Why am I not surprised, Miles? Bro, what's going on with the markets and the exchanges? Taft, good to see you. How you doing? There's a lot of things at stake right now. There's scenarios of essentially the Japanese market space raising the rates. That's putting a lower pressure on the market space. The World War III scenario that the UK is introducing is putting a lower pressure on the market space. And some other things that are putting pressure on the market space regarding macroeconomic events. XRP, good to see you. How you doing? Now, 24 AI companies have joined Trump's Genesis mission. So, if you didn't know what Trump's Genesis AI mission is, you're about to find out. 24 AI centered companies have joined the US federal government. New Genesis mission under Donald Trump. Donald Trump has created a Genesis mission where AI companies or US AI companies are joining right now. 24 AI companies so far have joined. The list includes OpenAI, which is ChatGPT, Microsoft, Nevada, Amazon Web Services, Google, and 19 more companies that essentially either have signed MOUs or already are working with the Energy Department or the national labs or told the White House they plan to take part. Michael, the head of the White House official of science and technology policy, said the goal is to raise outputs across labs and research centers. Michael's exact words pretty much were, harnessing cutting-edge AI for science will dramatically increase the productivity of American scientists and researchers. The Genesis mission, introduced by Donald Trump, will help Americans, essentially scientists, automate experiment designs, accelerate simulation projects, and generate predictive models that will lead to breakthroughs in energy, manufacturing, drug discovery, and beyond. 24 AI companies right now, 24 US mega AI companies are working with Donald Trump's administration, and it's called essentially the Genesis mission introduced by Donald Trump. Trump started the mission with an executive order essentially last month that directed agencies to line up their research programs and AI tools under a single structure. The mission will use computing systems from national labs run by the Energy Department and rely on federal databases to run more AI heavy equipments. So this is quite interesting because according to Michael Saylor, we're heading towards an AI bubble burst. But according to what's happening behind the scenes regarding the 24 AI companies now working with the US government all together simultaneously, introducing data, trying to be productive for the American essential people, for American businesses, essentially introducing some sort of AI tools for drug processing, for anything that essentially they want. It's interesting because we were supposed to be heading towards an AI bubble burst. By the looks of it, we might not go towards an AI bubble burst if the US essentially government is behind AI right now. Michael said the setup is meant to shorten timelines for scientific findings by giving researchers broad access to tools and data already controlled by the federal government. The administration also noted that AI work depends on dense data centers that consume large amounts of power. Officials said that this raises the need for new energy sources and grid essentially upgrades, which is exactly what AI needs to advance. And hence why Michael Saylor said, and so not Michael Saylor, hence why Michael Burry said that we're heading towards essentially an AI bubble burst. Trump has made AI development one of his priorities during his return to the White House by announcing policies aimed at easing the construction of AI sites and giving companies room to work. At the same time, he also pushed back on the state rules he argued would place extra demands on firms. Critics argue that the state rules are needed to handle issues such as essentially biased outputs, deep fakes, and user safety risk, since federal rules have moved slowly. The order also says the secretary must review and update the mission's list of challenges each year with the essentially APST and the NSTS. Their work also must follow national research needs and the administration's research goals. The order also states that the APST through the NSTSC must bring together interested agencies to align programs, statistics, data researchers, and so on. I'll be very honest, the easiest way to put all of this regarding essentially what's happening with the 24 AI companies now working with the US government under Donald Trump's mission called Genesis mission, to me, I don't think we should be heading towards any sort of AI bubble burst anymore. It's still one outcome to consider. Sorry about that. It's still one outcome to consider, but to me, it doesn't seem like we're going to be heading towards an AI bubble burst anymore now. We're further away from it, you can pretty much say, because Michael Burry was betting on AI running out of money and a massive bubble burst is going to be happening. By the looks of it, if 24 AI companies, massive AI companies, are working with essentially the US government, and the US government's behind it, funding it, helping it essentially pass regulations, at least that is out of the equation. So the only one left in the equation is the Japanese market space, because a Japanese market space, essentially rate rise and also an AI bubble burst, would definitely make crypto fall even further. So if we're only going to be having a sharp decline from the Japanese rate situation and then a bounce back, that's okay. Because regarding the scenario of AI bubble burst is now out of the equation with the US government behind it, which is good, which means Michael Burry was wrong for the time being. Now, moving on, essentially from the AI bubble burst scenario to Ripple. Before we talk about Ripple, let me just take a sip of water. Ripple expands partnership with TJM today to strengthen digital asset services. We had incredible news from Ripple today. Ripple, a prominent player inside of cryptocurrency solutions, is strengthening its foothold with an expanded collaboration with TGM Investments. This move not only signifies Ripple's ongoing commitments towards enhancing institutional trade execution, but also reflects a strict focus on digital asset markets. The partnership essentially aims to bridge gaps within digital finance, providing a more cohesive service offering essentially for both parties involved. Throughout the recent years, Ripple has consistently sought to expand its influence and capabilities within the global financial sector. Compared to previous collaborations, this expanded partnership encompasses a significant step forward in fortifying its infrastructure and capital efficiency. While previous endeavors centered essentially mainly around strengthening financial stability, this partnership essentially moves a step further by delving into advanced digital asset markets. The bolstered relationship enables TGM Investments to capitalize on Ripple's infrastructure to better support trading and clearing services. This collaboration is also expected to facilitate TGM's clients, including institutions, keen on delving into digital assets. Ripple affirms this by saying the expanded partnerships with Ripple enables TGM to offer its clients improved capital and collateral efficiencies, as well as enhanced clearing stabilities and balance sheet supports. TGM also stands ready to benefit from Ripple's prime existence, essentially capabilities in digital markets. This will also help equip TGM to extend its market coverage for hedge funds, family offices, and global investors interested in digital assets. Steve, also the co-manager for TGM, noted that the infrastructure support, saying that the partnership provides the resources and infrastructure required to support the order flow we execute on behalf of the counterparties, particularly as institutions increasingly seek exposure to digital assets. This is what I mean when I say Ripple can take footsteps other blockchain projects cannot. Ripple doesn't have to stand on the sidelines essentially and say, pick me, test me out regarding the other crypto projects, because Ripple essentially is a private company, which means they can take footsteps, which means they can get essentially acquire licenses, acquire partnerships, acquire companies to expand the XRP ledger. Things that Ethereum can't do unless it's chosen to be used, things that Solana can't do unless it's chosen to be used, things that AVAX can't do unless it's chosen to be used. You get the picture. Ripple doesn't have to essentially wait around to be chosen to be used and tested. It just takes another footsteps and it buys another company, takes another footsteps, essentially acquires another partnership, which expands the XRP ledger. Ripple's recent activities have been noteworthy, including gaining approval for payment expansions in Singapore and Abu Dhabi. These essentially expansions complement the partnership by allowing Ripple to further integrate its stablecoin within various global financial systems. Regarding Ripple's stablecoin, RLUSD, Brad did say by the end of the year, RLUSD will be a top 5 stablecoin, and he was right. RLUSD is a top 5 stablecoin right now, aiming to improve service offerings and accommodate a broader client base. Furthermore, Ripple's collaboration with payments essentially company FinTech, essentially Red Dot Pay, earlier this month highlights also its commitment to bolstering stablecoin essentially payment capabilities. This coordination reinforces Ripple's overreaching strategy to establish a formidable presence inside of digital finance. While private blockchains flaunt significant adoption within the financial sector, as seen with JP Morgan, HSBC, and new initiatives, public networks have yet to align fully with regulated finance. Ripple's strengthened ties with TGM underscores a trend favoring essentially permission systems aimed at evolving digital finance landscapes. The expansion of Ripple's partnership with TGM reflects alignments with broader industry trends towards decentralization and secure transaction mechanisms. Similar patterns are also visible across competitors like JP Morgan and HSBC. In other words, the same footsteps that mega banks like HSBC or JP Morgan take inside the financial sector to expand their footprint even more inside the financial sector is the exact same footsteps that Ripple is capable of taking inside the financial sector to expand its footsteps also. No other blockchain company can do this. Ethereum can't do this, Solana can't do this, AVAX can't do this, XLM can't do this, HBAR can't do this. No other blockchain can do what Ripple's doing. It pretty much acts like an organization. It acts like a private company because it is, and it acts like a bank. With also their new licensing, it definitely is a bank now. Now, also on the topic of Ripple, Vivo Power partners with Lean Ventures in a $900 million Ripple and XRP linked deal. Vivo Power, a Nasdaq-listed company, has entered into strict partnership with South Korean asset manager Lean Ventures. The collaboration will see essentially Vivo Power's digital asset unit, Vivo Federation, arrange the purchase of $300 million worth of private Ripple Labs shares. This transaction is designed to provide South Korean investors with indirect exposure to Ripple's asset, particularly XRP. The deal is structured to offer exposure equivalent to approximately 450 million XRP tokens, valued at $900 million based on current market prices. This transaction is significant as it marks Vivo Power's continued involvement in Ripple-related investments, expanding the company focus on digital assets. Vivo Power's digital asset unit, Vivo Federation, will also lead the process of essentially sourcing and acquiring Ripple Labs shares for Lean Ventures. The investment will be managed through a dedicated vehicle for institutional and accredited retail investors in South Korea. Vivo Power's responsibility is to ensure the acquisition of the shares, and the company will also earn management fees and performance-based compensation for its role. In a statement, Vivo Power noted that it had already received approval from Ripple to purchase the initial preferred essentially shares, and discussions with existing institutional shareholders regarding further acquisitions are ongoing. Vivo Power wants to expand even further in Ripple. Vivo Power's goal is to secure the $300 million target and ultimately achieve a net income return of $75 million over the next 3 years. Lean Ventures, a South Korean asset management firm, is also driving force behind this essentially investment deal. The firm is working with Vivo Power to facilitate the purchase of the Ripple shares for its client base. The transaction has drawn significant interest from institutional investors in South Korea, including companies like K-Weather. Lean Ventures also aims to raise its assets under management by offering this Ripple-linked investment opportunity. The growing interest in Ripple Labs in the essentially XRP token in South Korea signals a larger trend towards digital asset investments in the region. South Koreans in some cases purchase more XRP on essentially exchanges than they do in purchasing Bitcoin and essentially Ethereum. South Korean institutional and retail investors are also essentially increasing enthusiasm for blockchain-based investments, with Ripple's strong market position adding to the appeal of this opportunity. Vivo Power stands to benefit financially from the deal, primarily through the management fees and the performance-related essentially earnings. I'm so sorry about that. I don't know. Sorry about that. That's the second phone. So, regarding essentially Vivo Power and South Korea and the other essentially investment that regarding the other partnership that Ripple has essentially done with TGM. As I said before, Ripple can do essentially things that other blockchain projects do struggle to do, which is essentially expand its own footprint inside the financial sector. Other projects have to wait in line to be able to expand their footprint, whereas Ripple doesn't have to essentially wait in line. They create their own line, essentially, and acquire their own partnerships and expand their own footprint inside the financial sector. Today's essentially partnership with TGM is brilliant for Ripple. And the other investment that's happening, with the $900 million investment that's happening essentially with Vivo Power and Lean Ventures in South Korea, where South Korean investors want to be involved in Ripple's future, it just shows what type of future Ripple is going to be having, especially now that with that bank and charter license and everything else that's going to be coming with it. On that note, also just want to add one other thing. XRP is still in a winning streak in terms of ETF inflows, whereas Bitcoin and Ethereum are still having outflows in terms of their ETFs. The price isn't reflecting it because the amount of outflows it might be having essentially through exchanges in terms of the inflows that are happening essentially in the ETFs are not comparable, but it does show you that high-profile investors are such interested in XRP ETFs compared to Bitcoin ETFs and Ethereum ETFs in times and situations like this. On that note, that XRP's winning streak is still continuing in ETFs, and institutions still want to buy XRP, and so do South Korean essential investors want to be involved in Ripple's future. We have come to the endings on tonight's live. This was episode 420 of the CMF live show. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune this live Monday to Friday, 10 p.m. long time onwards. And regarding the Japanese rates, the moment that happens, expect the market to essentially drop sharply, but also a bounce back should be on the way. That's one outcome. The second outcome is everybody's expecting the market to do a sharp decline based on the Japanese essentially rates. The market might not do a sharp decline because everybody will try to short the markets. So the market might just do the opposite because the house has to win. So expect both outcomes going forward. I will see everybody tomorrow, same timing as usual, 10 p.m. London time onwards for the next episode of the CMF Live Show, episode 421 tomorrow. One more time, thank you so much for the €10 donation as well. And the disclaimer of this live show, as always, is no financial advice, no political advice, and whatever I see is only for entertainment purposes. Is tonight the Japanese? Yes, it is. Japan will be purchasing. Hello, Miles of CMF. LG, good to see you. How you doing? Japan will be purchasing more and more XRP Ripple in the near future. 100%, I agree. Night, Miles of CMF. See you tomorrow. Joe, see you tomorrow. Sometimes you as well. And tonight should be for Japanese. Good night, Miles and family. Great live. Many thanks. See you tomorrow. See you tomorrow. In same as usual. Funky. Yep, Japan is today. Thank you, Miles and CMF. Have a great night. Let's go, Mike. See you tomorrow. Same time as usual. Great live, Miles. Thanks for keeping us in the loop. Have a great night and see you tomorrow. Same time. Let's go, Autistic. See you tomorrow. Same time as usual. Good night, Miles. Let's go, Funky. See you tomorrow. Same time as usual. Outstanding. Way to bring the smoke on episode 420. Take care, Miles and CMF. Let's go, Ray. See you tomorrow. Same time as usual. Thank you very much, Miles and CMF. See you all tomorrow. Let's go, Carl. See you tomorrow. Same time as usual. And thank you so much for attending your donation as well. Night, Miles and CMF. LJ, see you tomorrow, same time as usual. Thanks, Miles. See you tomorrow. CMF, let's go, Shelly. See you tomorrow, same time as usual. Thank you, Miles. Good night, all. Let's go, Stormy. And see you tomorrow, same time as usual. Thank you so much to everybody from the CMF who has smash the like buttons and smash the retweet buttons on this live show if you watch us on X. Thanks so much to everyone who's also smashed the like buttons on YouTube. If you haven't, CMF members, smash the like buttons and the retweet buttons on X and like buttons on YouTube. I will see everybody tomorrow, same timing as usual. Thanks, Miles, for your great live show. I wish you a nice evening. See you next time, my friend. Always good to see you. Will you take some days off for Christmas and New Year's Eve? We'll see. Good night, Miles, and thanks, Callie. See you tomorrow, same time as usual. Thanks, Miles, for another great evening. See you tomorrow night, mate. Let's go, Addy. See you tomorrow, same time as usual as well. I will see everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you're around the world. Love you all. See you all tomorrow. Like, follow, subscribe, comment, retweet if you already have. If you have, thanks so much. See you tomorrow, same time as usual. And disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes.